All right, it's now 12 o'clock. Just gonna wait about 30 seconds here and get started. All right, let's do it. Time for this week's prop trader market update. I know I haven't done one in a few weeks, so I'm back. I know you all missed me. Let's hop into it with our disclosure. I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA, SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Quick position disclosure here. There's definitely been some changes over the course of the last few weeks since the last time I did a webinar. Obviously just got into this Roblox. That's a pretty recent direct listing to the marketplace. Just short a little bit of SPYs today, a little bit before getting started, just to hedge myself a little bit. But basically, I've been net long 100% just about since the recent market bottom, which has worked out pretty well for me over the course of the last week or so. So anyway, that's my position disclosure. Quickly about me, haven't done one of these in a few weeks, so I guess we can do a little bit of a longer background about me. I'm senior trader and registered principal for T3 Trading Group. I have been with T3 really since 2010. I've been licensed with T3 since 2011. I've mentored well over 100 professional traders for T3, currently managing a group that is definitely in excess of 50. It might be more than double that. I am heavily into martial arts. I've been doing martial arts for 30 plus years. I've been teaching martial arts for 20 years. I haven't taught basically in a year now because of the COVID situation and all the traveling I've been doing. I'm also a really big skier. That's been the benefit of all the traveling I've been doing. I've been out of New York for a year basically now. Well, first I was in upstate New York. It almost doesn't count as real New York. I've lived in Manhattan for 15 years or so. And I've used COVID as an opportunity to travel around the country. Currently, I'm on the Idaho-Wyoming border on the Idaho side. Again, big skier. This last weekend at Targhee was amazing, not because there was powder, but because there were spring-like conditions, and it was just beautiful day, beautiful skiing, and that's definitely a big passion of mine. So that's kind of the short background about myself. I've been a professional trader for over a decade now. So today I'm going to be talking about markets, which is my favorite thing to talk about, and then I'm also going to talk a little bit about getting started with T3 as either a professional proprietary trader or as a retail trader. If you have any interest in reaching out to me, here's my direct email. If you're interested in talking about markets, talking about skiing, you're going to be in the Wyoming area, you're interested in becoming a trader at T3, either on the retail side or the professional side, reach out to me and I will be happy to provide you any additional information that you need. So with that said, let's talk about markets. Let's go to the charts. All right, here is a 5-minute of the SPYs over the course of the last couple of days. We're positive by a little bit. Today's price action has been relatively boring after a strong rally yesterday. We've been in positive territory for the S&P just about all day, but just 15 minutes ago, we started testing this intraday support here at 397. Hedged myself a little while ago by shorting some SPYs because everything else I have is 100% to the long side. So I wouldn't be surprised at all to see if we got a little bit of a rollover just because of the degree of extension in the market here after such a big move. So obviously you can tell, this is now my daily chart, we've had a very tight trading session so far. So we'll see what that turns into. It's also a Fed day tomorrow. But this rally that we've experienced over the course of the last, like, whatever it's been, 6-7 trading sessions, this 5 days here was absolutely mind-blowing. Basically in 5 days, we went from about SPY 372 to about SPY 396. Incredible move. And we've seen over the course of the period of time, which I haven't been doing the webinar here the last few weeks, volatility picked up in a huge way. I love this price action. This volatility was incredible. For the most part, it was really profitable. There was a couple times when I got caught a little bit flat-footed, to be perfectly honest with everybody, like I always am. You know, these initial moves here. It was incredible, honestly. We saw, basically on February 23rd, panic selling this morning, which we recognize as a huge buying opportunity. By the next day, we were looking at like panic buying, complete euphoria. And then 2 days later, we broke that low, which was also insane, but on a closing basis, basically still held 380, whipped all the way back up to 390. This is where I got caught a little flat-footed. I was expecting volatility after this bout of volatility over 5 days to actually dry up a little bit in a bullish fashion with some upside consolidation in this area. That didn't happen. The signal here was that we closed weak that day. That was followed by an inside day and down. Next thing you know, 2 trading sessions later, right after it looked like we were in the all clear, we were breaking below 380 in a major way, and then it was into here that we saw major tech capitulation, particularly in a lot of these high-flying names that we've all been talking about for months now. There's so many stocks, your plugs and your fuel cells and anything crypto-related, anything electric vehicle-related. There have just been so many of these incredible moves in stocks that we saw basically going back, starting like last November, where these stocks were going 100%, 200%, 400%, 600% moves. And then it was really into this move here. I'm just looking at the SPYs, so it doesn't really do it justice. You can see a little bit more with the Qs, which are relatively weak. If my chart will populate, there it goes. You can see this more with the Qs, which are relatively weak. Qs had a complete technical correction. You know, they went down in excess of 10% and capitulated here with this hammer candlestick. And a lot of these names capitulated even further than that. Again, there's just one stock after the next that we could actually be looking at that had massive downside capitulation. We were looking at a lot of these names that had pullbacks that were 50, 60%. Hammer capitulation, oftentimes followed by an inside day, followed by a very strong snapback, including in the Qs. There's been a lot of key levels that I've been looking at along the way. So one of the things I like to do to take a half step back, so the main indices I look at are the S&P, the NASDAQ, and the Russell. I don't really look at the Dow so much just because it's not enough companies. And one of the things I like to do, it's really big picture game planning. I always like to look at the SPYs or the Qs or the IWM, all these indices, and ask myself, is it currently bullish, bearish, or neutral? Why do I want to know that? Because from a big picture game planning perspective, if all 3 of my indices, if I can look at the SPYs, the Qs, and the IWM, and all 3 of them say, hey, bullish, well, what do I want to be doing primarily with my trades? Shorting, buying? Obviously, I want to be buying. I'll have a higher probability of success in my trading if I have continuity amongst those indices, and they're all telling me that we are currently in bullish territory. And that situation broke, right? So in February here, mid-February, every indice was very clearly bullish, right? Here's your Qs, clearly uptrending, clearly bullish. SPYs, all-time highs, clearly bullish. IWM, all-time highs, clearly bullish. IWM had been the strongest value. Small caps, mid caps have a massive accelerated uptrend here that basically started in November, and even are continuing to show relative strength, primarily overall being at all-time highs again as of yesterday's close. So I want to look at the markets. I want to ask myself those questions. Okay, so obviously all 3 of those indices, and I'm just keeping the IWM up, the Russell 2000 right now for the time being, but we'll look at all of them. All 3 of my indices here in mid-February, very clearly bullish. Well, at what point do they go from bullish to neutral? At what point do they go from neutral to bearish? Well, the definition of an uptrend is a pattern of The definition of an uptrend is a pattern of higher highs and higher lows. The definition of a downtrend is a pattern of lower highs and lower lows. So where does this change? Where do the key levels come in where they break? Well, on the initial pullback here, the IWM was holding 215 as support. And at 215, it's a pullback, but it's still within the realm of this pattern of higher highs and higher lows. Your trend line here is still primarily intact. On the break of 215, which basically just occurred for like a day and a half, to me, that's when the IWM went from bullish to neutral. Okay, I got to take a little bit of a step back. Obviously, there was a big capitulation there that we were able to take advantage of. Let's look at the NASDAQ, because the NASDAQ was relatively weak. NASDAQ broke down first, broke down hardest. And why, by the way? Interest rates. TLT is what I pay attention to. TLT going down means interest rates are going up. Interest rates going up, what does that mean? That means good for energy, clearly. Good for financials. This is how they make their money, right? Based on interest rate spreads. Good for big banks. Bad for tech. Why is it bad for tech? Well, it's bad for tech because we have so many companies. There are all these companies that I don't even think would exist if interest rates haven't been at historic lows for the last decade now. I really don't think that companies like Uber, Lyft, Tesla, I don't even think they would be in existence if it wasn't for the fact that money has basically been free for over a decade. Now all of a sudden interest rates start going up. What does that mean? Money is potentially becoming less free. Now we know even with the 10-year working its way up to 1.6%, 1.8%, that is still historically low, but it's an uptick and it unnerved the market, particularly in tech, where you have so many companies that have been reliant on this free money in order to exist. How many years in a row has Palantir lost money? Palantir has lost money for 18 years in a row. It's incredible. They've never made money. Now they're a public company, and obviously, there's been a lot of talk with Palantir, and you always want to think about the potential of future growth. Sometimes companies can justify their PE in the long run because they can grow into them. But you have all these companies that basically couldn't make money, that were heavily reliant on free money. They're always able to raise additional capital. And now all of a sudden money becomes less free. Well, that hits tech the most. And that particularly hits, we saw many examples, but fuel cell come into mind. Fuel cell high at $29.40, pullback low of $11. We saw many of these high-flying companies that gave these massive moves show retracements that were in excess of 50%. NASDAQ not quite as bad because obviously it's heavily composed of some companies that have excellent balance sheets, like Apple. Even with Apple, though, Apple, a lot of its performance over the course of the last 1 to 2 years has been from multiple expansion. So even on an Apple, you see a pullback as a result of interest rates increasing. Interest rates increasing weighs upon multiple expansion, or even does the opposite. Has that actually come back in line a little bit? So again, tech saw this big pullback, but we saw, and again, I have no position in fuel cell, I'm just using it as an example. There are so many of these stocks that had these pullbacks that were in excess of 50% and gave this pattern. It's like fuel cell, and NEO being another big one. NEO being a stock that I'm bullish on. I don't have a position in it right now, but I've liked this thing. This NEO pulled back from $65 plus to a low here of 32. And now you see this pattern over and over again. Hammer capitulation followed by inside day breaking up. And it led to a tremendous buying opportunity. I remember having to tell my team on this day, March 5th, in the middle of the day here, March 5th being this day, SPYs actually did not break new lows that day, but the Qs put in their absolute low. I remember telling the team, I was like, guys, this is a standard correction from interest rates. This is not another financial crisis or another coronavirus crisis. We have now pulled back in excess of 10% in the NASDAQ. We pulled back in excess of 50, 60% in a lot of these high-flying stocks, and they're giving us our capitulation signal that now is the time to come in and buy. And that's basically what we did. One position that I had gotten fairly heavy in, but it's a similar pattern as many of the others that I'm now out of, was this lemonade. And again, just one pattern after the next, you're going to see this. Huge sell-off into extension. How do I measure extension? It's the distance between where the stock is trading and the space between the 8 and 21 EMA. The space between the 8 and 21 EMA is what I consider to be technical equilibrium for any stock that I'm looking at. Heavy capitulation into extension. Many of these charts, this one maybe not as much, on very high volume, followed by an inside day that broke up. This right here is a signal for what? Not for reversal. That's what many of you are probably thinking. That's my reversal signal. Well, maybe it can become a reversal, but that's really not what I'm counting on. What I'm counting on is this being a signal for retracement. Retracement higher after the extension and the breakdown. And then maybe that retracement higher can become a reversal. And there's a process by which retracements become reversals. What I don't want to do as a professional trader, honestly, is ever pick absolute tops and absolute bottoms. I'm not good enough. Let me just say that again, because I have no problem telling you guys I'm not good enough. I am not good enough to tell anyone when an absolute high or an absolute low and a trend is about to end and we are at the absolute high penny of it. I'm not good enough. I am good enough to tell you where and when we have a high probability of the market retracing in the other direction. Meaning we had a huge move up and we're retracing back down, or a huge move down and we are retracing back up. And then I have rules, because the key to consistent trading is to have a rules-based approach. I have rules in place for how that retracement higher can become a reversal, and then how I can capture it with my P&L. And that initial trade here was a fantastic trade. And there was, just one stock after the next. We looked at NEO, we looked at Fuel Cell, we just looked at Lemonade. You could look at Peloton, breaking higher after, this one pulled back from, 170 to 94. There's just more or less one name after the next that really exhibited that pattern that was very tradable. So now let's go back to the Qs. So Qs, similar but different. They did not give the same degree of downside extension as some of those high-flying stocks, but it was a big move into correction territory. Volume maximized at or near the low, which is what you want to see. There was some downside extension, and now we got this retracement. What I've been telling my team over the course of the last 3 trading sessions is less is more. The big opportunity was down here. The big opportunity was on March 5th, March 8th, March 9th. Now, all this stuff is given the huge bounce backs. Do I want to be coming in, buying stocks after the move? Maybe. Sometimes, if I think the move can give continuation. But in this case, if we just had a counter trend trade that gave me the full degree of retracement that I can expect, do I now want to be coming in and buying? No, you missed the move. The opportunity was there. We identified it, my team and I, in my virtual trading floor. We identified it in real time. We took advantage of it. And now it's about profit maximization. Honestly, it's about taking some profit back into this equilibrium area and then implementing those rules in case your retracement higher can become a reversal higher for continuation. Now, if my retracement is going to become a reversal, what do I want to see? Well, what's the definition of trend, right? I said this already earlier. The definition of a downtrend is a pattern of lower highs and lower lows. The definition of an uptrend is a pattern of higher highs and higher lows. So when do I have a reversal? What is a reversal? A reversal is when a stock or a market goes from a downtrend to an uptrend, or an uptrend to a downtrend. Pretty simple. But it's not as simple when you're trying to discover that in the chart. So we can say here that the NASDAQ had what I would call a short-term downtrend, right? It's within the confines of a much larger uptrend, especially if you wanted to look at a weekly chart. But we had a breakdown, we had a technical correction, and there is clearly a pattern of lower highs and lower lows here. You have a high, you have a low, you have a lower high, a lower low, a lower high, and a lower low. This is a short-term downtrend. Then I have my retracement candle. What does retracement mean? Retracement means pivoting back up. What's the most likely thing that's going to occur is trend continuation. And now this is where it gets tricky because I have competing trends. I have a short-term downtrend within the confines of a bigger picture uptrend. Again, specifically, if I were to go to a weekly chart, on a weekly chart, this almost doesn't even look like a blip on the radar. We're clearly on a weekly chart in a pattern of higher highs and higher lows. So what is going to win? There has to be a winner, right? Is the weekly uptrend, that big picture uptrend, going to continue? Or is this shorter term downtrend going to continue? I don't know. And that's the direct answer. I don't know. All I can do is I can view the market in terms of probability specifically. And I know from a probability perspective, the bigger time frame tends to be the survivor. Not always, but often. So if that bigger picture uptrend is going, let me repeat that. Let me rephrase that. If the smaller picture downtrend is going to reverse, that will then coincide with the bigger picture trend. That's higher probability than my weekly chart giving a complete reversal and my smaller time frame downtrend continuing. But again, it's just probability. And at the end of the day, I can't know for sure. Everything we do is in terms of risk, reward, and probability of success. So now, though, where are we at? Well, the market gave a beautiful retracement higher. It overshot the equilibrium area, overshot the 21 EMA, and made a high here of 319.86 in the Qs. Basically 320, we can call it. Now, is this 320 going to be the next lower high in this short-term downtrend? Maybe. If it is going to become a reversal, there's rules for that. Usually what happens is your stock, or your market in this case, gets kind of stuck between the 8 and 21 for a period of time. Gets stuck in this equilibrium area, trades back and forth. It shoots over the 21 EMA, it shoots below the 8 EMA a little bit, but eventually what this consolidation leads to is a potential higher low. And then I need this high to break in order to have a higher high. So now I have a low, I have a high, I have a higher low. Right here, I'm not in an uptrend. But in the break of 320, it puts me in an uptrend. The break of this pivot, I now have a higher high and a higher low, and that fits my definition of an uptrend. Now, I still kind of consider the Qs to be in neutral territory, honestly, which means we could hold resistance and break down. What I really need the Qs to get above is 325. This resistance that was created, this lower high that was created of these two equal lows when the market first broke down, that's what I need the NASDAQ to get back above. And today, it went after it, but it's failing so far. 324.20 is today's high. So yeah, technically, I've got a little bit of a higher high, higher low situation in here. There is a third possibility that we could just turn into a range and not, if you're not in an uptrend and you're not in a downtrend, you're in a range, right? So that's the third possibility, is that this could turn into a range. What's going to happen next? I don't know, but I need to know where my key levels are. I know that, so first of all, I know that the SPYs are still in their uptrend on every time frame. I know that the IWM is bullish and an uptrend on every time frame. I know that the Qs are still neutral. So, given that the SPYs and the IWM are so bullish, that leads to a higher probability that the Qs will break to the upside than it would be if the SPYs and the IWM were telling me a little bit of a different picture. But we'll see, because the NASDAQ's also relatively weak, and that's another layer of probability that I need to pay attention to. And I need to continue to pay attention to this TLT. TLT, again, that's the main ETF that I use to have an understanding of what treasuries are doing. So TLT is down 0.5% today. That means interest rates are up. I've got to pay attention to that. That's bad for tech. I need TLT to stabilize if I'm going to see tech start breaking higher and the Qs get back above 325 and go back into bullish territory. and I'm not convinced of that yet. Now, I've been pretty much 100% net long since this low's come in here when we recognize that capitulation in a lot of those stocks. What I've primarily done into this up move is take exposure off, lighten up, take risk off the table. And now today, I shorted some SPYs here for the first time as a little bit of a hedge because I'm concerned about the degree of extension that we have in the SPYs, the degree of extension in the IWM, and the possibility of failure in the NASDAQ off this 325. So that's why I've hedged myself out a little bit for the first time today. I'm also picking my spots in certain other names. I'm involved in this Roblex now. I like it a lot. I love the story of what they're doing. I think that this company has so much potential. I have an initial price target of $100 on this thing that I'm looking for a move for. So we'll see if it's able to work up there. But if tech starts getting really weak, multiples start to compress, this idea could fail. And even though I feel strongly about Roblex, similar to how I felt strongly about Airbnb the end of last year and the beginning of this year, which was a tremendous trade for me, I understand that the possibility of failure in the market always exists. And being prepared for the possibility of failure in your trading is the most important thing. I can tell you without a doubt, I was just talking about this to my team in the afternoon meeting, I think yesterday, the biggest losses I have ever taken in my entire trading career were when I was so convinced that my idea was going to be right. And all I was doing was thinking about how much money I'm going to make when I'm right, that I did not think about the consequence that I could be wrong. Those are the biggest losses I have ever taken in my entire trading career. So even when I built into this Roblex position now, below $70, I am prepared for the possibility of failure. I have an exit game plan if this idea doesn't work out. But so far so good. It caught its first sell-side analyst upgrade this morning. Gave a tremendous move here. I sold a little bit of my position into this move today, loving the relative strength. So, Roblex is a position I'm paying attention to. Obviously, I'm paying attention to all my positions. I'm paying attention to the market because the market affects all my positions. And that's pretty much it, So today's just kind of a big update on things because I know I haven't done one of these weekly webinars in a few weeks. We're going to get back to doing it on a weekly basis now. It's been a wild and incredible, almost month now from a trading perspective, just with volatility really increasing, which is something that we were prepared for because of our understanding on gamma, which is something that we talk about, in my virtual trading for a lot amongst my professional team. So we were prepared for an increase of volatility. By the way, because this is something I also been talking about a lot on my team, and I'm happy to impart this information to everyone who does the webinar here as well. What you have to understand about volatility increasing, what my approach becomes when volatility increases, less size, more space risk, right? I kind of saw that the volatility was coming a little bit. I sized down my portfolio a little bit. I sized down, my outstanding capital usage on a day-to-day basis by a fairly significant degree. And even with sizing down, my P&L swings were larger in this period than they were in this period because the volatility increased. So when volatility is increasing, again, it generally means, a great general rule is less size, more space risk. Meaning, if you are risking $100 in a trade by buying 1,000 shares and risking 10 cents, you now may want to risk that same $100 by buying 400 shares and risking 25 cents. Right? It's the same dollar risk, but to risk that same dollar in a higher volatility environment, I want to give it more space between my entry point and my stop loss on less size in order to have similar dollar risk, if that makes sense. So it's something to pay attention to. I've been of the thought process over the course of the last few days that volatility may die back down. We'll see if that happens or not. So far, it really hasn't. We did see some consolidation here over the course of the last 2-3 trading sessions as we got extended. This rally into the close yesterday was rip-roaring and honestly surprising. And it shows real bull strength as well. This initial high on this day easily could have been attributed to shorts being squeezed, breaking all these key levels into this gap. People who are shorting in here, they're all getting squeezed. But the thing about that short squeeze is that's not going to last for, I don't think, for this many days in here. At a certain point, your shorts get squeezed and real bull buying had to take over. So at this point, again, like I said, we're a little bit extended. I have some concerns about the extension in the SPYs, which is only about a little bit, the extension in the IWM, which is actually being corrected as we speak, and I have some concerns about the possibility of a Q failure. We really need to keep an eye on these interest rates. It's key to the market right now. And that's basically all I got for you guys, so that's this week's update. Let's jump into T3 a little bit. Let's talk about prop trading with T3. Okay, so T3 Trading Group is one of the largest proprietary trading firms in the United States. We have hundreds of licensed professional accounts. We have 4 physical offices now, including our Manhattan headquarter office. It's usually myself and Scott Redler. We're running our Manhattan trading floor kind of together. Scott's awesome, but I haven't seen him in a while. The office has been shut down for just over a year now, which is crazy. I was always an in-office guy. I've been making that commute to our Manhattan office since 2010. I was city biking to the office every single day. I loved it. I was always a believer that the office was necessary to work with professional traders. I think COVID proved me wrong. I've been so ecstatic and honestly surprised about just how well things have worked for my team since the office shut down, utilizing the virtual trading floor. I actually think the communication in the ProDesk VTF has gotten better since we shut down our office than when the office was open, to the point where it is going to completely change, I think, business going forward for our traders. I think it makes the office honestly almost useless. We really don't need it anymore to be able to communicate properly. We don't need it anymore for training of the traders. We're able to get all of this done, I think, in a very appropriate way, virtually. I think when the office reopens, it's going to be different. It's not going to be any more of that, used to be like that old school mentality. We're yelling at each other across the monitors. Hey, Joe, I'm looking at Apple. What do you think? And I think that is just going to be done. It's going to be everybody plugged into the virtual trading floor. The community's been so strong in ProDesk. Really pumped with how that's been going. So you don't need to be in an office. You can be trading virtually anywhere. And even before COVID hit, probably 50-60% of our traders, I'm guessing, were remote traders to begin with, and we're not coming into an office. And I think that percentage is going to be increased significantly going forward. T3 Trading Group is a registered SEC broker, dealer, and member of FINRA SIPC. That means that if you want to become a professional trader, you have to be FINRA licensed with an SIE and Series 57 exam. It also means that you need to pass a background check. We'll provide you with study materials to get you through those tests. Once those tests are passed, we can get started trading. For professional traders at T3, we have 3 different software options: Lightspeed, Sterling Trader Pro, and Wolverine. I think we actually just onboarded a 4th one, the old Realtic. I forget what they call it now. Personally, I've been using Lightspeed for over a decade. I love it. Sterling Trader Pro is made by the same company or owned by the same company. Our retail accounts are all through Sterling Trader Pro. They're all really solid professional softwares. We have equities, we have equity options, we have futures, we have options on futures. I'm specifically focused on the equity side for T3, a little bit with the equity options, even though I don't personally trade options. But if any of these asset classes interest you, reach out to me, and I'll be happy to either speak to you myself, put you in touch with someone on my team, or put you in touch with someone on the futures team. A quick word on trading options. I guess this specifically applies to equity options. This has always been my thought process. Most people I know who trade options, most, not all, trade options in a retail account because of the natural leverage that's inherent in the product. I don't need that natural leverage as a professional trader at T3 because T3 gives me as much capital access as I could ever possibly want. So my thought process has always been, why do I want to trade options which are a less liquid product and are subject to time decay just for capital access when I already have as much capital access as I could ever want? So if you're a directional trader on the professional side, you're better off, I think, being involved in equities. It doesn't mean that options are useless. There are specific strategies to options trading where you need to trade options, like if you're trading spreads or calendars or whatever, or if you are selling covered calls for cash flow or for hedging purposes. That makes a lot of sense to me as well on your swing trading. But outside of that, just to trade options just for the leverage itself is not necessary, and I think you're better off on the equity side of T3. I guess what new traders should know, it's a little bit of what experienced traders should know, is that we have a really strong support system for our team. I conduct a daily morning meeting every day at 9 a.m. Eastern, a daily afternoon meeting at 10 after 4, really Monday through Thursday. Every afternoon meeting I do ends in a Q&A. We have a training program in place as well for new traders who are getting started. It's optional. If you're experienced, you don't have to go through it. But honestly, even my experienced traders, they tell me they get a lot from certain of the classes in the training program. Like when I'm talking about tape reading and routing and things of that nature. Routing is just a topic that not a lot of folks know about. I spent an hour and a half in an afternoon meeting last week specifically just going over routing for the benefit of my traders. As a professional trader, you choose how you route your orders, and there are costs and benefits to how you route, and it's something that you really want to learn. So, again, we have direct market access. We're not selling your orders out to HFT firms like the vast majority of the retail brokers do in this day and age. So you'll have access to a whole host of training and development when you get started with us. You will be required to fund your account with a capital contribution. What we do is we start by allocating you capital typically at 20 times your account for day trading, 8 times your account for overnight positions, and then you're compensated through a profit split. So, for example, someone who puts $50,000 into a professional account, it would not be unusual for me to give them access to $1 million on an intraday basis and $400,000 on an overnight basis. And again, all the training and development, the licensing, that's all stuff that we'll provide. And for experienced traders, again, T3's size is a huge advantage. If you want to come in with $1 million because you want access to $20 million, we can probably do that for you. Here's my email address, reach out. And you get all this great stuff for free if you open an account with us now. So you can get my VTF room for free, which is called the Pro Desk. You get my training program for free, which isn't listed on here. I think that's like a $800 or $1,000 value, something like that. You can get access to Scott Rudler for free as well. So, if you reach out now, you can get this potential offer, which is awesome. So here's my email address. I honestly think that if you take active trading seriously, T3 has the best offering that exists. Because on the professional side, you get capital access, you get access to training and development. Even on the retail side, we'll give you access to training and development. We are incentivized to see the traders that we work with succeed. That's what we want. So it's a phenomenal offering for direct market access. So reach out to me. Here's my email address. Again, reach out to me about everything. I'm a busy guy, but I'm a pretty friendly guy. You want to talk about markets? You want to come ski Jackson Hole? Hit me up. I love it out here. So again, here's my email address. Thank you everybody for the time. I am going to get back to my trading. It's an interesting market we got right now, and I got to manage my positions. So have a great rest of your day, everyone. And remember, like I tell my traders on a day-to-day basis, the key to successful trading is in your risk management. Focus on risk management first and foremost. Secondarily, you need to focus on reward maximization. Make that your focus. At the end of the day, it's a numbers game. You got to make the numbers work for you.